Hello, I'm Zhang Xiran from FTEC 4999 Group H, under the supervision of Professor He. Our topic is algorithmic trading for cryptocurrencies, and I will present our outcomes of the final year project for you. Let's first have a snap of investment in cryptocurrencies. Since the release of Bitcoin in 2009, the crypto market has developed a lot. During recent years, there is a dramatic booming in the crypto market. There are multiple reasons for us to choose this topic. Many people flood into the crypto market, and cryptocurrencies have been deemed highly speculative assets. Due to the erratic market behavior and the high price volatility of cryptocurrencies, there is a demand for an active investment strategy to maximize the profit engaging the crypto trading market. Motivated by this, we try to develop an algorithmic trading program for cryptocurrency investment, which can implement trading decisions automatically based on the price forecast. To achieve our goal, first and foremost, we need to establish the price prediction model for cryptocurrencies, and we decide to make use of the trading data and text data such as news articles. This is our trading data source, and as we want a high-frequency trading strategy, all the price and timestamp we use are daily frequent. We first apply capital asset pricing model to the crypto market, which describes the relationship between systematic risk and expected return for asset. We try to find out how different market indices perform and whether CAPM can help find mispricing in the crypto market. Based on the formula, we conduct a linear regression using 10 cryptocurrencies with 3 crypto indices. For instance, using the 2 market indices of CCI30 and CCMix, the p-values of estimated beta are large for many cryptocurrencies, suggesting that there is insufficient evidence to conclude that a non-zero correlation exists. Besides, take the Bitcoin and C20 as an example, the result of R-square is much smaller than 1, suggesting that many points of actual return do not fall on the regression line. As we want to make a precise decision whether the cryptocurrency is correctly valued, the CAPM could not help a lot. With 3 market indices, over a half of 10 cryptocurrencies get an estimate beta whose p-value is larger than 5%, and overall R-squares are much smaller than 1. We feel the performance of CAPM is unsatisfactory and cannot efficiently help find mispricing for each day. So we turn to more advanced price prediction models, which are time series analysis, recurrent neural network, and text mining model. So first, let's review the time series analysis on the cryptocurrencies. To fit the data of log return, we use the ARMA plus Gauge model. Here, the blue line shows the result of Bitcoin price prediction. The blue region is the 95% confidence interval. Although most of the prediction lies in the confidence interval, we see that the prediction price is somehow lower than the actual price, which is reasonable because for most of the cryptocurrencies, we find that ARMA 00 is the best estimation. Then the future log return equals to the mean plus a gauge model, which is highly relevant to the volatility of the price of previous day. So when the price changes fast today, the prediction will also change according to this. The next model we've tried is the recurrent neural network, which is powerful for modeling sequential data such as time series and natural language. The architecture of our model is shown here. We have 4 long short-time memory layers. The input of our data is the past 60 days prices. The output is today's price. The dataset information is listed below, and the training and validation loss is quite low. The blue line here shows the prediction result of the Bitcoin price. Here we see that the accuracy of RNN is worse than time series model because it only considers 60 days prices. Apart from market data, the price of cryptocurrencies is also influenced by news and public sentiment. So here we try taking this factor into consideration. We got the news articles about Bitcoin from this website and performed sentiment analysis using a pre-trained model called Vader Sentiment. Here we obtain the sentiment score each day, and finally we combine this score, the number of news, and today's price to train an XGBoost regression model towards tomorrow's price. And here is the result. We see from the figure that the accuracy is better than the recurrent neural networks. By comparing the three models, the mean squared error indicates that the time series model is the best among these three. However, if we look at the price tendency prediction, we see that the time series model and RNN cannot reflect to the sudden price drop on September 6th. The prediction prices of these two models are actually increasing. However, as for the sentiment regression model, at least the prediction price drops at this time point. We may conclude that the text mining model performs better when predicting the tendency of price change. Based on the price prediction model we've tested, we construct portfolio investment strategy. Here we choose 3 cryptocurrencies and 6 training and testing periods. The training period is for applying mean variance analysis and the price prediction models. In the test period, we will apply our investment strategy. First, we construct a base portfolio using mean variance analysis by maximizing the Sharpe ratio. The mathematical optimization function is shown here. The table shows the result weights of 3 cryptocurrencies in each training period. Next, let me introduce the detailed strategy we will apply in each 1-month test period. First, we use all of the initial $100,000 to buy these 3 cryptocurrencies based on the weights we constructed using mean variance analysis. Then the next steps are divided into 2 groups. The first group is to buy and hold, which means that we just hold these cryptocurrencies without further operation till the end of the test period. Group 2 is our experimental group. We buy and sell these cryptocurrencies based on the following rule. First, we calculate our predicted return, which is the tomorrow's predicted price minus today's actual price and divided by today's price. Here, the predicted price is just the result of our price prediction models, which are time series and RNN. Next, we perform buy and sell according to this predicted return, and an example is shown here. At the end of the test period, we calculate the value of account balance plus the value of cryptocurrency holdings and make comparison. The table here shows the result if we use time series model in the predicted return. We can see that the differences between Group 1 and Group 2 are quite small. Also, in these 2 cases marked in red, the final value of our strategy are worse than the buy and hold strategy. The table here shows the results if we use recurrent neural network. We can see that the volatility is higher. In most cases, the final values of this strategy are higher than the buy and hold strategy, some of which performs much better. Therefore, we may conclude that the RNN model is better than time series forecasting in most cases. Also, the frequency of the model can be higher. For simplicity, we only perform daily buy and sell. However, if we can get real-time data, we can perform this strategy every hour or even every minute. Apart from cryptocurrencies portfolio, we also try to construct portfolios using cryptocurrencies and stocks and indices. During this step, we found that stocks are not suitable for hedging cryptocurrencies because their correlation is quite low, and the optimal portfolio results during different time periods advise us to invest all in the Bitcoin. The literature review also confirmed our observations, as Bitcoin is barely correlated to any traditional assets at the daily level. In conclusion, aiming to develop an algorithmic trading program based on price prediction, we try different models to help project efficiently. To diversify the investment risk, we construct a portfolio combining different cryptocurrencies. We develop a high-frequency trading strategy, which is better than the buy and hold strategy based on the price prediction results. That's all for our presentation. Thank you for your time.